2023. So we have the statement there, and we have the trial balance that has been provided. In the trial balance, we have the debit and the credit sections, and you look at the items that have been given. There is nothing technical about this question. This is just the usual trial balance that you've been handling from the intermediate and the advanced level, or even the foundation level. Or if you did your CPA lower sections when it was still under section 1, section 2, it is still the same concept that we want to revise here. So the items that have been given, we have the ordinary share capital. The par value is 10 shillings. The figure is there. We have preference shares, share premium, 8% debentures given, accounts payable, accounts receivables given there. We have the sales, purchases, bank overdraft. We have discount received, discount allowed. Then we have buildings, then in bracket, it is at cost. That should already ring some bell in your mind because there is a reason why that cost is given in bracket. So we are going to see what of cases where you are given the fixed assets and there is no wording of cost given in a bracket next to it. What is the interpretation of the difference? And that should ring some bell at the back of your mind, asking you to differentiate between value of an asset at cost and value of an asset at its book value. So let's continue, but you think about that. We have also fixtures and fittings, also at cost. Then we have accumulated depreciation, and I want you to look at the date. When was this statement given? It is at 31st of March 2023, and accumulated depreciation is given at 1st of April 2022. Look at the dates, and also it should also get you to start thinking along certain line. Look at the date of accumulated depreciation and the date of the statement. Then, so accumulated depreciation for building is given there. Accumulated depreciation for fixtures at the same date for both of them, also given at 1400. Inventory, I also want you to check on the date, is important. The date of reporting or the date of the financial statements and the date when the inventory figure is given. That should also advise you. We have return outwards. I believe we know what return outwards is. When you meet about return inwards, you also know what it means and how to handle it and what it affects. Director's fee is given, admin expenses, selling and distribution, bad debts written off, allowance for doubtful debts also given. Look at the date. The date also is 1st of April 2022. We have retained profits also given at 1st of April 2022. Those dates are important. That's why they also bring them there. Then we have investments at fair value. Now, additional information, and this is where the major adjustments normally come in. So let's look at the additional information. The first one, the company maintains a gross profit margin of 20%. Number 2, as at 31st of March 2023, accounts receivable balance included 250,000 due from a customer who has been declared bankrupt. As at 31st of March 2023, accounts receivable balance included 250. So this 31st of March 2023 is the date of this financial statement, is the date of this trial balance given. You see, it is the same date of reporting here. So you are being told at this date, at that date, the accounts receivable balance, the accounts receivable, we just read it here. You see this figure of 8250. This balance includes, that balance includes 250,000, which is due from a customer who has been declared what? Bankrupt. How do you handle that? We are going to see in a short while. Additional information number 3. The allowance for doubtful debts is to be adjusted to 5% of the accounts receivable as at 31st of March 2023. Allowance for doubtful debts. Additional information 4. As at 31st of March 2023, admin expenses accrued amounted to 175,000. So we have admin expenses accrued, while prepaid selling and distribution expenses amounted to 75,000. So how do you handle prepaid expenses? What do prepaid expenses mean and how do you handle it in a statement? And then how do you handle accrued admin expenses, accrued expense? How do you handle it when you prepare financial statements? That is an adjustment we're going to see how to handle. Number 5. The company paid interest on the debentures for the year ended 31st of March 2023 on 5th of April 2023. Look at the date when the interest was paid on the debenture. For the year ended 31st of March 2023, but it was paid on 5th of April 2023. It was paid a month later. How does it affect your preparation of financial statements? Number 6, depreciation is to be provided. For building is 2% per annum on cost. And then for fixtures and fittings, it is now 10% per annum on reducing balance. Now, you need to remember how you are computing depreciation using these two approaches. There is the direct approach, and then there is the reducing balance approach. What is the difference? Do you know how to handle them? Very important. We are going to also remind ourselves of that and see how to go about it. Number 7, the company directors propose that preference dividend to be paid. Then a dividend of 10% on ordinary shares also to be paid, and then 2.5 million to be transferred to general reserves. Now, these adjustments here will affect the equity section, and we're going to see how to do that statement. Required, what does the examiner want us to do? The value of inventory as at 31st of March 2023. Now, with all these adjustments, the first part is to look at how to get the closing inventory, or the value of inventory at the end. Look at the date 31st of March. This is the date when the trial balance was extracted. So this is the reporting date. So we need the closing inventory, the inventory to be included in the books at that date of preparing financial statements after these adjustments. Then part B, statement of profit or loss for the year ended 31st of March 23. So we are also going to do our income statement or statement of profit or loss. Then now the third part, part C, statement of financial position. Statement of financial position, sometimes called the balance sheet, as at that date of 31st of March 23. Now, I've read the question and I believe we've already started thinking towards the preparation. How were we handling these questions? So straight away, let us start. Where do we start from now? When you get to a BDA paper, I know in this meeting there are those members who have already tried the BDA exam before, either in this April of this year, or they already did it before and now they're attempting it for the second or the third or the fourth time. Worry not. So we are here to learn and get the concepts. And again, I want to encourage those students who have also tackled this paper before, that however much we might handle some easy concepts that you might deem they are very easy, do not disregard them, because it is those easy concepts that come in exams, and you realize that because you are overthinking, you are looking down upon them, you realize that you forget those very simple concepts and you find it difficult in an exam, and you might end up failing, not because you do not know, but because you are disregarding the simple concepts. Examiners are not there to set complicated things. No, it is these simple ones that will challenge you. They just twitch, they just bring you a concept in a hidden way, and you realize that you can be thrown off guard. So I want us to look at these things very keenly, and we're going to get it right. So if you've not attempted the BDA paper, once you get into that exam room, you will get an Excel sheet with these questions. I'm assuming this is question number 21. Now, if this is question number 21, because section A starts from the theory questions from number 1 to number 20. So these practical compulsory questions will start from question 21. And in most cases, it will be an FR question. So either FR or FM, but in most cases, FR starts from question 21. So assuming this is 21, how do you handle it? Very easy. You do not have to create another sheet by saying, this is the question, so I write here, now this is an answer for that question. You will have difficult time maneuvering between the sheets because you will be looking at the question on this end, then you have to click and come back and do your computations. It might consume a bit of your time, though it's okay. You'll not be penalized for doing that. But to make your work also easy, within the same question, just divide the page into two. So you can use colors, like now I've chosen that color there, so that you divide the page, the question on the left, and then you want to do your computations on the right side of that question. So that is advisable so that you look at the question and you do the computation side by side. This will save you some time. Good. So let us start it straight away. Now, we already know what we are required to do. We are required to prepare the statements, but then we need to get the value of inventory as at 31st of March. That is the first part that we are required to do. Now, as we start doing the first part of that question, someone who has understood how to do the adjustment for inventory, can someone give us an idea so that we start answering the first part very fast? There's a discussion, and I'd want us to be engaged so that it is not like, just giving you answers like this is this. If you do not understand, it will not help you much. So somebody, I want us to start straight away with the first part. The first part is part A, and we are required to get, according to the required, we are required to get the value of inventory as at 31st of March, 2023. Somebody? Esther is giving us their opening inventory plus purchase minus return outwards. Thank you, Esther, for the contribution. Malakwen is saying start with opening inventory. Good. Thank you. Someone else having something else to contribute on the same? Someone else. Do not be left out. And I tell you guys that, participating in these sessions will help you to understand it better. I want us to look at, as you think, because I know someone will also contribute before we even do it, I want us to open up our minds and think together. Now, we are asked to give the value of inventory at the end of the reporting period. So as we look at the value of inventory at the end of the period, I want us to look at the trial balance given. The trial balance given, let us identify where inventory is. So where is inventory? Where is inventory? Now, if I look at that trial balance given, the inventory figure given was as at 1st of April, 2022. Look at that date with the reporting date. I told you to check on the dates very keenly. So the figure there we were given. Then, under additional information, also check on anything that affects inventory. That affects inventory. And then see what kind of adjustment are we going to do then so that we get the final figure of inventory to be used. Let me see, I see some chart here. Information 2, accounts receivable. Somebody called Mo, M-O, is saying additional information 2, accounts receivable. So you need to tell us, how do you think accounts receivable will affect the value of inventory? You need to be able to give us that information. How do you feel it will affect the value of inventory? I want us to contribute, members. I want you to give your views on this so that you do not just copy-paste the answers. Copy-paste the answers. Don't want you to just copy-paste the answers. I see, let me see, I see some charts here. What are members saying? Okay, so Mo is saying we can start with it. Mary is saying add one. Sales returns. Opening inventory less return outwards. All right. So thank you, members, for the contributions. They are good because they're going to help us get a way in which we agree on how to give the final inventory adjustment. So very fast, let us go and look at the elements affecting inventory. So the elements affecting inventory, we have to start with our opening inventory. Remember, the reporting date is 31st of March, 2023, and that is the date when we have the financial statements being prepared. So the value of inventory is the closing inventory figure. And I believe we know what inventory is. So let us start. What is the value of opening inventory, for example? We start from the opening inventory. And the opening inventory that we were given is in the trial balance. And I want us to identify it. It is here. You see the opening inventory figure? That is the 10,500 as at 1st of April, 2022. So that amount of 10,500, I can even just go ahead and refer to it like that. So that is the opening inventory. Now, onto that opening inventory, what other adjustments affect the value of that inventory? So we move to see if there is any element again in the trial balance affecting inventory. I don't see any of them affecting inventory. So we go and check on the adjustments and additional information. We start with the first one. Now, the company maintains a gross profit margin of 20%. Do you think the margin will affect inventory? Do you feel margin will affect the value of inventory? As you think about that, we go to the second additional information. As at 31st of March 23, accounts receivable balance. Accounts receivable balance. This balance of 8250 includes accounts receivable balance included 250 due from a customer who has been declared bankrupt. There is a member called Mo who said that we are starting to do the adjustment from additional information number 2. So it is your time. Mo, can you tell us how to do the adjustments from your suggestion? You said we look at the additional information number 2 to start with. We don't want to leave that your contribution out because we need it. We need that your contribution more. Speak to us, talk to us now. How do you suggest we do the adjustment there more? Okay, no worries. That's fine, that's okay. So let us look at additional information number 2. Now, members, do we adjust inventory using additional information number 2? Does it affect our inventory figure? Yes or no? Does it affect our inventory adjustment? Yes or no? Does it affect our inventory adjustment? Yes or no? Okay, I see members are saying no, it does not affect. So let's go to the third additional information. The allowance for doubtful debt is to be adjusted to 5% of accounts receivable as at 31st of March 2023. I don't think that also affects our inventory. Unless if it does, feel free to tell us. Additional information number 4 is talking about admin expenses accrued, then also prepaid selling and distribution expenses. We've not had anything talking about inventory there. Number 5, interest on debentures does not mention anything to do with inventory. Number 6, depreciation does not affect inventory because we are depreciating fixed assets, that is building and fixtures and fittings. We look at number 7, that is proposal by the company directors on the payment of preference dividends and ordinary dividends. That also does not mention something to do with inventory. Do you mean there is no adjustment affecting inventory? There is something we forgot here in the trial balance. Immediately after the inventory figure that we were given, there was return outwards that also we were given there. Any other thing that affects inventory? Members, I want us to be together here because your contribution is very important. Remember, I only have 2 eyes to go through those, the statements. But now you are many and you should be able to pinpoint most of those things faster than I can be able to do them. Any adjustment affecting inventory again? Any? I've seen, let me just bring on board this so that as you think through, purchase returns. Good. Purchase returns. Now, we have return outwards. Return outwards. Return outwards. Is it a purchase return or a sales return? A sales return is normally a return inwards. When customers buy and return to you, that is a sales returns. Purchase returns is when you purchase, but due to one reason or the other, you are returning some of these items that you have purchased. Let me see, I see contributions here. Purchases, discount allowed in the trial balance. Discount allowed. Let me see the discount allowed. So discount allowed, does it affect inventory adjustment? Mary, how does it affect inventory? Mary? How does it affect inventory? I see Mary wrote there. In fact, she wrote it in capital letters, in uppercase, discount allowed in the trial balance. So that sounds very serious. So Mary, you need to tell us, how do we adjust it using the discount allowed? Mary. Mary, speak to us. We want to move. Mary. Matayo is not agreeing, but Mary is also not speaking to us. Members, you can also even unmute on your end. Remember, I believe I've allowed you to unmute and contribute. So you should be able to unmute on your end if you need to speak and tell us your contribution on that. You should be able to unmute. I'm just checking if at all you can be able to unmute. Okay, good. Yes, Jay is saying discount allowed affects revenue. Okay, good. Members, adjustment for inventory. Remember, it's only 2 marks. And it is giving us this, we are taking this much time to question on how to adjust for that inventory. Are we really doing justice to this question? Are we really doing justice? Are we really doing justice? Are we really doing justice? I want us to, let me see. I see members here. Someone saying something. Should affect sales. Okay. What affects inventory? Okay, good. I don't want us to waste any more time on that inventory part. I don't want us to waste any more time on that inventory part. Now, I want us to do it together. Now, we've already picked the value of inventory, opening inventory from the trial balance given. And the opening inventory is 10,500. Now, if we look at any other element affecting the value of inventory, when you talk about return outwards, this is the same as purchase returns. You are returning it outwards. You purchased, but then you are returning part of it. Return outwards, that is purchase returns. My question is, do purchase returns affect inventory? Somebody very fast. Do purchase returns affect inventory? Good, yes. Good. You're saying purchase returns affect inventory? Yes. Good. I see members are saying yes, it affects our inventory. Good. So once we've realized that purchase returns affects our inventory, where is it? Where is the purchase returns? Where is that purchase returns? Purchases is here. Inventory you are given here, then purchases returns or return outwards are here. 2000. Opening stock, add purchases, less return outwards. Regina. This is interesting. Now, members, I want us to remind ourselves of something. How do you get the cost of sales? And as we look at the cost of sales, I want us to start straight away with preparing the income statement because I have a catch there. I'm seeing people are now deviating. I want to leave that closing inventory first, but let me just write it there, closing inventory. We are going to get it as we move with the statement. And we are going to get that figure there. Let me just highlight it in yellow. I've realized there is some confusion. People have already started overthinking. Very fast, let us come and do the income statement. That closing inventory will come in there automatically. And I want us to see, because I'm seeing what Regina said there, and and it is leading to something else apart from adjustment for inventory alone. So because of that, let us go straight ahead. Now, we all know, how do we prepare the income statement or the statement of profit or loss? Very simple. It is the same concept that you had covered in the previous sections. So do not overthink. Do not even worry about this. Statement of profit or loss. That is what we're supposed to prepare. The format remains the same. And as you know, the format, we normally start by revenue. We start by revenue. And I want us to look at our figures. The level of precision is in thousands. So I will just write them in thousands. Let me skip that and say thousands like that. I want us to do them in thousands like that. So our figures are in thousands. I want us to start putting in the figures. So revenue, let me bring it down here. And these ones I put in bold like that. Good. So we know very well that when preparing an income statement, you adjust your revenue with the cost of sales so that you come and get your gross profit and you start adjusting it as you move forward like that. Revenue, cost of sales. Then, as we look at the cost of sales, do we know how to get the cost of sales? That is what Regina already started bringing up. And Regina was mentioning about opening stock. Regina was talking about purchases. Regina was talking about, return outwards. But remember, we normally also have carriage inwards, though I've not seen anything to do with carriage inwards here. So let us put in the format and we are going to see how it all plays out together so that we be at the same page, all of us. So now, revenue. Let us pick revenue very fast. Where is revenue? Revenue is the same as sales, and I can see there is 120. So I will just pick it like that. Then on that revenue, we normally adjust by cost of sales. Now, this is the adjustment that I see members who are bringing on board instead of giving me inventory adjustment. So now, how do we normally get cost of sales? Cost of sales. We normally start by opening stock. So I just want to push this here a bit so that I do the cost of sales adjustment here. It's normally opening stock. Opening stock. Remember, guys, I want you to remember something. This preparation of financial statement, normally we have the normal preparation and then we have published accounts. Published accounts. If it is published accounts, there is a specific format in which you prepare published accounts. You have to categorize all these elements according to the required standard. But here, this is not a published account. We are just doing the statement. We are preparing the financial statements. That's why I'm not computing the cost of sales elsewhere, then transferring it here. We are doing it on the face of that financial statement. So that's why you see me coming here and starting to narrow it down to opening stock. Then from opening stock, we add purchases. The same elements that have been given to get the closing stock, but then we know that's how to get the cost of sales. Then I want us to look at the trial balance. Did we have any carriage inwards, carriage on purchase? Before, as we think of the carriage on purchase, I want us to look at the opening stock. I want just to bring the opening stock there. Opening stock, we were given here as Where is it? Where is it? Inventory as at 1st of April, this 10,500. Then purchases figure we've been given as 105,500 there. Then did we have any carriage on purchases? Carriage on purchases, normally called carriage inwards. Carriage on purchases. I'm trying to look at the trial balance. And additional information, I did not see anything to do with carriage inwards, so we do not have any carriage inwards. But if you have any carriage on purchases, you will add carriage inwards or carriage on purchases, whichever term that they will decide to use, you will add it. But for our case, it is 0, so we don't have carriage inwards. Then this return outwards, we normally less the return outwards. Return outwards, or sometimes called return on purchases. Return outwards or return on purchases. And we less it. Where is the return outwards? Return on purchases. It was given somewhere here. Return outwards. This one here, it is the 2000 like that. Good. It is the 2000 like that. Then from there, after we less the return outwards, we normally get what we call cost of goods available for sale. That is what we normally get after this adjustment. We get cost of goods available for sale. And with all that, let us get the adjustment so that we get the cost of goods available for sale. It is just the net effect. And now that you have covered Excel tips, I'm just going to use alt equals to get the net effect. And there I have my cost of goods available for sale. From there, we normally less closing stock. We normally less closing stock. Closing stock. Look at the format. I believe this is something you can really relate with. It is not a new concept. We're just doing the same things that you've done before. I'm seeing a chart here. Please expound on the carriage on purchases. Okay. Somebody called user. No worries. Now, when you talk about carriage on purchase, if you're a business person, I want to give you a practical example. If you're a business person, you go and you purchase or you buy your stock items. Once you buy your stock items, the cost that you incur to carry these items from the supplier's premises to bring them on board to your business, that cost is what we call carriage on purchase. That is the carriage on purchase. That is the cost we call carriage on purchase. So that cost, you normally capitalize it on the purchase value because it is a cost you've incurred to bring these goods that you've purchased. That's why we call it carriage on purchases, carriage on purchase. And other words, sometimes you can call it carriage inwards. That's why we are adding it. It is a cost. It is part of the purchase. We are adding it onto it. Carriage inwards or carriage on purchase. I believe that answers your question for the member who was asking that. I believe it answers your question. Now, members, after we adjust or we less the closing stock, which we are looking for, that's when we are going to get the cost of sales. That's when we are coming to get the cost of sales. After we less the closing stock, we get the cost of sales like that. The cost of sales like that. What about inwards? Return inwards. Return inwards is return on sales. As a business person, when you sell certain goods to a customer, then this customer returns these goods because of one or two reasons. For example, they bought wrong description of goods or they bought more than they required. Yeah, so because they do not need the goods or maybe they've bought in excess, they have to return part of it. That sales return is what we call return inwards. My voice is breaking. I think, let me see. Members, are you able to get me clearly? Am I audible? Somebody say my voice is breaking. Yeah, I keep breaking. Okay, maybe network. Let me just... Let me just check on something here in a minute. Think maybe network is not very stable. Hello, members. Are you able to get me now? Confirm if you can be able to hear me well. I hope there is an improvement. Are you able to get me well? Am I audible now? Am I audible now? Am I audible now? Good, good, good. Now, members, I want us to see something here. I want us to see something at this point. Now, open your eyes. That's why I mentioned, even if there are those members who have attempted the BDA paper and they look at these concepts as very easy, I want you to look at this eye opener. Up to this point, remember, we have two unknowns. We are looking to get the closing stock and we are looking to get the cost of sales. And then after the cost of sales, after we less the closing stock, we get the cost of sales. And remember, after that cost of sales, we normally compare cost of sales with revenue so that we get our gross profit. We get what we call what? Gross profit. I'm bringing this on board so that you'll be able to see it clearly. Now, how do we normally get our gross profit? We normally get our gross profit by comparing the cost of sales with the revenue. And I just want to put it here. Let me, my arrangement of these elements, let me see here. Now, we normally get the difference between the revenue and the cost of sales. Our cost of sales figure should be here, so that we get our gross profit. So let me just push this cost of sales back a bit like that. The net cost of sales, no, let me just leave it where it was. It's okay. The net cost of sales. Now, with this, I want to challenge you. Now, tell me, how do we get the value of closing stock? And we need to get our gross profit, which is the difference between cost of sales and the revenue. Now, I want us to go to the additional information and point out where the examiner was hiding the concept. Now, look at additional information number one. Look at additional information number one. There is something there that is going to help us get this thing very easily. Look at additional information one. Now, what does it read? It says the company maintains a gross profit margin of what? Of 20%. Gross profit margin of 20%. Now, if the gross profit margin is 20%, how do we use that gross profit margin to help us get the closing stock? Which concept are we going to apply to get the gross profit? To get our closing stock, yes, using the gross profit margin. Somebody very fast. Do we know the formula of getting gross profit margin? What is the formula? Gross profit margin. We normally have markup and margin. Markup and margin. We normally have markup and margin. Markup and margin. Now, markup is normally gross profit over, margin is normally gross profit over
Net
sales.
sales.
Is it over sales? People forgot all these concepts.
Yes,
Over
margin
revenue
is
or
over
sales,
sales.
that's okay. That's okay. So I believe you know how to convert markup to margin and all that, but I don't want to go there. Let us just continue with our margin. Now, if you've been given your margin as how much? As 20%. Now, do we have gross profit? The answer is no. Do we have sales? The answer is yes. Sales is the revenue. So we only have to look at the one unknown, which we do not have here. So if we have margin, which is 20%, then we know very well that margin is equal to the gross profit. Then we divide by revenue. Do we have revenue? Yes. Our revenue is 120,000. Somebody get me the gross profit from there. What is the gross profit from there? 20% equal to gross profit divided by 120,000. Computation very fast. How do we get that gross profit? Somebody?
20%
24,000. That is very easy. 24,000 is 24,000, like that. Now, we already have our gross profit using the gross profit margin given. I believe no one has gotten confused at that point. That is where the examiner was hiding the whole concept. That is where the examiner was hiding the concept, giving you the gross profit margin so that you use that gross profit margin to get the gross profit itself. Now, remember, we know how to get the gross profit. I've told you it is the difference between the revenue and the cost of sales. But now we have that gross profit itself from that margin given, and our gross profit is 24,000, like that. Now, let us work backwards. Let us work backwards and get what we call closing stock. Which concept are we going to use to get the closing stock? Which concept are we going to use to get the closing stock? Very fast, somebody. Which concept are we going to use? We already have our gross profit. Somebody saying markup.
No, you get the cost of sales now since revenue minus
Mary,
cost
what
of
is the
sales.
formula of markup? Can markup give us closing stock? It's going to help us get the cost of sales, right? That is one way. That is one way. And I'm seeing somebody is giving us an interesting concept. Goal seek. Goal seek. V, tell us, what are the variables in that our goal seek? What are the variables in our goal seek? Members, I believe you know how to use goal seek. Go to the data tab, what if analysis, come to goal seek. Go to the data tab, what if analysis, then the window pop-up of goal seek comes up. Now, from there, I want Mary to tell us what are the variables for the members who do not know what goal seek is and how it works. I want sorry, it was V. V, tell us what are the variables in our goal seek? Which cell are we setting to what? Which cell are we setting to what? And which cell are we changing? Mary is, V is quiet. V is quiet. V is saying we are setting profit to 0. V, you are saying we are setting profit to 0. Are you able to unmute, V? Can you unmute and speak? I want somebody to understand that concept and how it applies here. V, are you able to unmute and speak very fast? Are you able to unmute? She's not speaking. Okay, I'll not wait any longer. Time is also moving. Now, members, listen to this. Listen to this. Now, I want us to set these formulas and I want us to get it together. we've already known how to get cost of sales, opening stock, add purchase, add carriage inwards or carriage on purchase, less return outwards. We get the cost of goods available for sale. I believe up to that point, we are all together. Now, from there, we normally less closing stock. We normally less our closing stock. So that after we less our closing stock, we are going to get our cost of sales. Now, when we get our cost of sales, how will the formula arise? Lewis is raising up his hand. Yes, Lewis, go ahead. Lewis.
Can you hear me?
Lewis, go ahead.
Can you hear me?
Lewis,
Yes.
Lewis,
Oh,
you've raised your hand. I've just lowered it.
I don't know if Mwalimu can hear me. Perhaps I type.
Was it a mistake? Lewis is quiet.
Okay.
Lewis is not talking. Okay, let me continue with what I was saying. Now, we know how to get the cost of sales, and the cost of sales up to this point is now we normally take the cost of goods available for sale. Sorry, here the cost of goods available for sale. Then we less our closing stock to get the cost of sales. Cost of goods available for sale less closing stock to get the cost of sales. So I've just set in that formula like that. So because our closing stock is still zero, then our cost of sales will still reflect the same value as the cost of goods available for sale. Lewis is talking. Yeah, you. Lewis, speak up again.
Can you hear me now?
Yes, I can now get your voice. Yes, tell us.
Yeah, I just wanted to ask whether or not we are including depreciation and loss or gain on disposal of assets.
Thank you.
Especially depreciation, because I saw it.
Thank you for that question, Lewis. Thank you for that question. So, Lewis, when you talk about depreciation and accumulated depreciation, that one now touches on non-current assets or fixed assets. At this point in time, we are just talking about inventory or stock. Inventory is never affected by depreciation. You only depreciate the fixed assets or the non-current assets. So at this point in time, we are just looking at cost of sales and we are just setting up our formulas to help us get the closing stock, which is not affected by depreciation. So whatever depreciation that is accumulated given there in the trial balance do not affect our computations at this level. It is going to come in under admin expenses. As we will be moving forward, we are going to calculate the depreciations and it will affect the fixed assets. You see the buildings and the fixtures and fittings, those are the elements affected by depreciation. So Lewis, I believe we are together there.
No, there is depreciation on additional information 6.
Additional information number 6. Depreciation.
Yeah, not the accumulated one.
Depreciation is provided as follows. Buildings at 2%, fixtures and fittings at 10%. So those depreciations will affect building and fixtures and fittings. At the cost of sales level, at this point, when we are talking about the adjustment to get the closing stock, that depreciation, we don't use it at this point. It is going to come under other expenses. Are we together, Lewis? Depreciation is an expense. It is an expense.
Excuse me, sir.
But we are going to compute them separately. It does not affect.
Excuse me, sir.
Yes.
I think Louis has a point.
Yes.
But I just don't know. I also would like to be guided. But from his point, I think we were told in another class.
Yes.
It's not just what we were told. I think you also probably know that we were told that to calculate cost of sales, you're supposed to start with opening stock, add additional purchases, and then less closing stock.
Yeah.
And also, if there is a loss or gain on PPE, you're supposed to add the loss or gain loss on PPE and subtract the gain on PPE. And also you're supposed to add depreciation on PPE, if I'm not wrong. I think we were told something like that. So I think that is probably why he's getting his point. And even me sitting here, I'm confused on why we are not using it at this today. Yes.
Okay. I think there is a confusion in concepts and application area. You are right, according to the area that you are tackling in that other class. But then remember, we have preparation of statement of cash flows, the adjustments that come with this preparation of statement of cash flows. Then, because when you are adjusting cash flow statements, the approach is different from this point. Again, published accounts. I started by mentioning published accounts. When you are doing published accounts, the approach is also different from this preparation of financial statements, at this basic level. Remember, we are doing it at a very basic level. And when you talk about depreciation, remember, all these adjustments we are doing, we are just going to arrive at the cost of sales. The cost of sales. We've not gone to expenses part. It is from gross profit that we now start listing our expenses. And when we list our expenses, one of those expenses is depreciation on buildings and depreciation on fixtures and fittings. Then after putting those, yes? Sorry? Is someone speaking? So I want to believe you don't get confused. We are not doing published accounts. We are not doing a statement of cash flows. This one is a basic computation of cost of sales. When we talk about depreciation, it is going to come under expenses. And in fact, even when you are doing published accounts, this depreciation, you normally categorize it. Remember, on published accounts, we have three major categories. We have admin expenses, we have selling and distribution, and then we also have, in other instances, we also bring on board some other expenses, and then cost of sales. Now, depending on how the question is framed, the examiner can tell you to categorize depreciation under cost of sales, can be able to tell you to categorize depreciation under admin expenses. And depreciation can also affect depreciation on motor vehicle, which is an expense touching on sales and distribution. You can also be told to categorize it under that, because that is the docket where the motor vehicle which is being depreciated is being utilized. So let us not get confused at this level. We're just starting to do preparation of financial statements. We'll go step by step to published accounts, then we'll go to adjustments of statement of cash flows, and you're going to see it very clearly. So for the members who still feel a bit confused on that depreciation, how to handle it, just hold it there. You're going to get it clear as we move forward. At this point, let us just do the adjustments for cost of sales. Let us get our closing stock, then we move from there and start bringing on board our expenses. I don't know whether someone
Mwalimu, so
can answer. Yes.
what I'm getting is, just as we've been doing on those other examples, we can we can add depreciation here, or okay, we can factor depreciation and loss or gain on disposal here, or probably just below the gross profit as other expenses. So, and according to me, the net result would be equal. So I'm just asking whether I would be penalized if I factor it here as opposed to deducting it as expenses.
Okay, the net effect might still be equal. That's okay. But then in such a case, like for example, in our case here, we are going to compute the value of closing stock. I want you to try factor them in here. You can try factor them in here, and that goes against the standard on preparation of financial statements. Remember, preparation of financial statements and preparation of published accounts. We are not publishing, we're just preparing financial statements. Now, I want you to try both the two. Try factoring it in here under the adjustments of cost of sales. Then you tell me if you will get the same value of closing stock, which we are going to get in a short while. And you're going to realize that it is going to be very different. because of the approach and the level at which we are handling the depreciation. So for now, I would advise you not to go to that complicated side. Please just take it as simple as it is. As simple as it is. So we will just try both the two, and you're going to see your closing stock figure will be different from ours. So let us do our closing stock figure using these ones and get to see. Then you try that other one and you'll realize that it's going to be different. Now, members, we've already known our gross profit. I've written there the formula of getting cost of sales, and the gross profit here, we normally get it by comparing revenue with the cost of sales to get our gross profit. Very good. Now, I want you to look at this very well. We want to apply the use of sensitivity analysis tool called the goal seek. Goal seek is going to help us get the value of the closing stock with the formulas that we have set up to that point. How are we going to use goal seek to get the value of closing stock? I'm about to show you that. Now, the first step, go to the data tab on your Excel window. When you go to the data tab, identify what if analysis. I believe you're able to see my screen where the what if analysis is showing. Just click on that what if analysis. On the what if analysis window, drop down, you're going to see three elements: scenario manager, you're going to see goal seek, and you're going to see data table. I believe these things are not new to any of you here in this meeting. I believe you have handled them in class. Am I correct to say that? Is it okay for me to say that all of you are aware of all those three elements? Oh, Regina is saying they're very new. Okay. 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 But don't worry. We are going to get to understand them as we move forward. They are new concept to new members. All right. Don't worry. Don't even worry. Just know that under the in Excel window, we are going to use a sensitivity analysis tool. We call it goal seek. Goal seek is under what if analysis. And as we move forward, remember, that's why Excel is normally the opening. It's normally where you start from in the BDS syllabus, so that Excel introduces you to some of these concepts. So I think it is the tool that we are likely to use at this point. And however much it might be new to you for the new members, do not be scared. Do not be scared. And this one is just to trigger your mind so that you start thinking in the line of, there are those functions, there are those elements in Excel that you need to learn. And you should not even worry much because we are going to do them repeatedly. We're going to get several questions and apply the same concepts, and I believe you're going to get it. Now, for the new members, on your Excel window, just go to the data. You have Home tab, you have Insert, Draw, Page Layout, you have Formulas, you have Review. Next to the formulas, depending on the arrangement of those icons, next to formulas, you'll see something written Data. Just click on that Data. Then you'll see a menu of elements showing up. Just go and identify the forecast section, or sometimes it is just written what if analysis. Click on that what if analysis. You will see three items written there. Scenario manager is going to help us to manage certain scenarios. Then you are going to get something written goal seek, then data table. Now, goal seek is very easy, and it is what we are going to use. Goal seek is an element or a tool that helps you to get an element. You work from a known figure to unknown. Is somebody speaking? I heard some voice. So I was just mentioning that goal seek, if I click on it, you'll see that window that is popping up. It is written goal seek, and it is giving us three elements: set cell, to value, and then by changing which cell. Now, goal seek is a tool that is helping you to work from a known point to an unknown point. Working from a figure that you already know so that you get that which you do not know, to make it simple. Working from what you know to help you get what you do not know. And it gives you one output, meaning it gives you one answer. And I want you to see how we apply it in this case. Now, how do we apply it in this case? Now, you see that my goal seek window. we are going to set a certain cell to a certain value so that, and as we set a certain cell to a certain value, we want to tell Excel to change a certain cell so that we get that our figure that we set, that other cell that we set. For example, let us set the gross profit cell. I want you to look at our gross profit. You see the gross profit, it is giving us 6,000. Why? We don't have still our closing stock, and this is what we need. So we want to set our gross profit. I want to just click on that gross profit. You see it? That gross profit. I think this one is coming twice. No, let me click on that gross profit. You see that gross profit? That is the cell we want to set. And we are setting it to what? We already know our gross profit, which we computed using the gross profit margin. You remember this? Members, I believe you're remembering where we got the 24,000. See, that was the gross profit that we got from additional information number 1 using the gross profit margin. You remember how we did this? Now, we know the gross profit. And we want to work from that point that we know so that we get what we do not know, which is what? The closing stock. So we are setting that our gross profit, which we know, this one here, the 6,000. And we know that the value of the gross profit, the correct one is 24,000. I believe we agree. Gross profit is 24,000. So we are setting this cell where our 6,000 is. This 6,000 is wrong. We are setting it to 24,000. But what are we changing? We do not know closing stock, and that is what we are looking for. So, yes? All right, I think that's some interference. Now, we are changing which cell? We are going to change closing stock so that we get the figure of closing stock. Remember, GoalSeek is a tool that is helping you to work from something you know to help you get something you do not know. Now, we know the gross profit, 24,000. So we are setting that cell where gross profit should appear to 24,000 because that is the correct figure we know. And what are we changing? We are changing where we are supposed to get closing stock because that is what we are looking for. That's why I'm clicking on that cell highlighted in yellow. We want a figure here. We don't know it, but GoalSeek should help us get it. That's why I'm saying by changing that cell where closing stock should appear. I don't know whether somebody has understood how this concept works. Okay, Esther is asking where 6,000 is coming from. Let me just go back. I know these new fellows. I don't want to lose them. Now, Esther, we started by giving adjustments. Opening stock, we added purchase. We added carriage inwards, of course, which was 0. We did not have it. Then we less return outwards. What do we get? Cost of goods available for sale. I believe you know that. Then we less closing stock to get cost of sales. Let me activate the formula for cost of sales. It is cost of goods available for sale, less closing stock. We get cost of sales. But because closing stock is 0 still, this is what we need. That's why I highlighted it in yellow. It is 0. That's why you see cost of sales is the same as this. Now, how do we normally get profit, gross profit? We normally get gross profit by the difference between revenue and cost of sales. So that is how we got the 6,000. I activate my formula. I believe you are seeing it there. It is the difference between revenue. You see the revenue 120,000 minus cost of sales. That should give us gross profit. But this 6,000 gross profit, it is not correct because we do not have our closing stock yet. Esther, are you somewhere? Are you getting it? Are you getting it? Ah, good. Esther has understood that. Very good. So I go back to our GoalSeek very fast. Now, Esther, if you have understood it, we are going again. Now, which cell are we setting? We are setting the gross profit cell. We are setting it to 24,000, which we know. I believe everyone understands how we got the 24,000. This figure up here. Then, which cell are we changing? We want to get closing stock. So I click on that cell of closing stock. Once you do that, GoalSeek will do the computation for you. So I will go ahead and just say, okay, GoalSeek will do the work. And GoalSeek has already given me our closing stock, which is 18,000. Have we gotten the concept, guys? GoalSeek has already given us closing stock. Working from known to unknown. So we have our closing stock now using GoalSeek concept. Have we gotten it? Good, 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 good. Aha, somebody is asking, must I use GoalSeek? User, you must not use GoalSeek, but then it is the tool that will make your work easy at this point in time. If you have another alternative to get the correct closing stock, you are free to go ahead. But GoalSeek at this point is what the examiner was testing. Remember, this is a data analytics exam. So the examiner is testing the concepts of Excel, and GoalSeek is one of the concepts of Excel. Regina is saying hers did not work. Regina, the reason why yours did not work is because of the formulas. I want you to check just two things. Regina, just check two things. Just check only two things. And the things that I want you to check, let me just undo that. The things I want you to check is, do you have cost of goods available for sale, Regina? And is your formula showing up like that? Then, after you've confirmed that you have the cost of goods available for sale, confirm if your cost of sales is the difference between cost of goods available for sale and the closing stock. Cost of sales is equal to cost of this 114,000, which is the cost of goods available for sale minus closing stock. This one, you see that formula? It should appear under the cell of cost of sales. After you've done that, just confirm again if your gross profit cell shows you that gross profit is the difference between revenue and that cost of sales, the two cells. Make sure you do reference. I believe up to this point, you've done referencing, cell referencing. So make sure you do that reference for the two cells. After you've done that, if you run GoalSeek, it will give you the correct answer, what we've just gotten there. Yes, Esther has gone the longer route of converting the gross profit to the profit margin to markup, which is okay. That is also another method you can go, and you'll still get the same answer. But at this level, why do you want to avoid using such powerful tools like GoalSeek? So Esther, you are correct. And that is also a way to get it. So that is fine. You can also convert margin to markup. And you know that margin is normally higher than markup. So when you convert margin to markup, the denominator, you less one. So that you get your markup. And we know that markup is gross profit over cost of sales. Yes. So from cost of sales, once you get your cost of sales, you can work backwards and get your closing stock. But it is a very long route. It is very manual and long. So I pardon on GoalSeek. Good. So Mary, let us do GoalSeek again. Mary, I want you to get the GoalSeek. Now, Mary, you have revenue. I believe you do. You have our cost of goods available for sale. Mary, confirm if you have cost of goods available for sale. Do you have the 114,000? Do you understand how we arrive at it? When I talk about Mary, any other member who did not get it, I want you to also follow together. Now, if you have cost of goods available for sale, confirm that you have a formula on getting cost of sales. Remember, cost of sales is cost of goods available for sale minus closing stock. Confirm if you've written that formula. Make sure, and you do reference. Please do reference. Do not type manually, because Excel works with formulas. So under the cell of cost of sales, just click on cost of goods available for sale. In my window, it is cell G18 minus cell G19. Make sure you do reference like that. After you've done that, let us now go and check on gross profit. I believe we are together. How do we normally get gross profit? Please also do reference. Do not type. Put an equal sign. Click on revenue figure, which is 120. Then come and click on the cost of sales figure. At this point, it is still 114,000. Click on that cell. That figure should give you the gross profit. Are we together up to that point? Are we all having the 6,000 now? Do we all have the 6,000 as the gross profit? Because that is where we are starting from. Good. So I see Mary also has, okay, Rose also has the same, Regina has the same. Now, good. Now, once you have that gross profit of 6,000, now leave it there. Leave it there like that. You are all good. Now, I take you to addition information 1, where we were told about gross profit margin of 20%. And we did the formula here. Gross profit margin is normally gross profit over sales. We have the sales figure 120. We have the gross profit margin of 20%. We made gross profit the subject of this formula, and it gives us a figure of 24,000. So are we all comfortable with how we got the 24,000? Are we all together up to that point? Do we all have the 24,000 and we understand how we got it? Do we understand how the 24,000 comes? Good. Now, you have everything you need, guys. Now, after you have the 24,000 and you have set your formulas in this other sheet, then you have everything. Just go to the data tab, go to what if analysis, then pick on goal seek like that. And I want you to do it on your end also as we move together. Do it on your end. Because you've set the formulas, we should get the same answers, all of us. Now, once you have your goal seek pop-up window, the first area that you need to fill in is it is asking you to set cell. Set cell. Which cell are you setting? Which cell are you setting? Now go and click on the gross profit, the cell where your 6,000 is showing. Go and click on it. And you will see that area, that section asking you to set cell. It will give you the reference of that cell where gross profit figure is appearing, where the 6,000 is appearing. Once that shows up under that section of set cell, go to the next section asking you to value. Click on that space. You see that space in that window? Click on to value. Now, under that to value, you are setting the cell to the correct value of gross profit. We already know the correct value of gross profit, which is what? 24,000. We all agreed we knew how to get the 24,000. So just come there now, type. You can go ahead now and type the 24,000. Just type the 24,000. You can as well refer to that cell where gross profit of 24,000 is, but you can go ahead and still just type it in. Type the 24,000. Then, by changing cell, now that is where the point is. By changing cell. Now, when you come to the point of by changing cell, we are choosing that cell that we do not know. We are going to get now the value of closing stock from that cell. So come to where you wrote less closing stock. We did not write anything there. Click on that cell where your closing stock figure should appear. The cell where your closing stock figure should appear. That is the cell we are changing, and that is the figure that we need. I hope we have keyed in the correct figures up to that point. I just want to hope that. Are we together up to that point? Are we all ready? Set cell, you click on the cell where we have the 6,000, the gross profit. To value, you type 24,000. Then by changing cell, click on the cell where your closing stock should appear, the value of closing stock. If you have all the three set together, I want you to click on OK to confirm so that GoalSeek can do the computation. If you click on OK, it will do computation and give you the figure of closing stock. Mine is giving me 18,000. Are you also getting the same? Members, are you getting the same? Very good. Very, very good. Jay has gotten it. Very, very good. Mo has also gotten it. This is good. Esther has gotten it. Now, that is how we use GoalSeek to get a figure that we do not know. We work from point of known to unknown. So that is the concept. So even if you had not covered this concept in your class, I believe you've already gotten some hint. You've gotten some hint about it now. And that is the essence of that. Yes. So GoalSeek has helped us get our closing stock. And remember, I want you to look at the marks allocated by the examiner for that question. How many marks was it? Only 2 marks. The concept the examiner was testing using GoalSeek. Using GoalSeek. So you see, it is something that if you know it, you do it within minutes, within a second. In fact, in less than a minute, you already have your figure for closing stock. Then now you go ahead and start doing in your expenses. And for the members who are talking about depreciation, this is where now depreciation is going to come in. We already have our closing stock. Now part one is already answered. So we're already preparing our statement of profit or loss because closing stock will be required. And we've already seen that it has applied here. And again, when preparing the statement of financial position, we are going to use the same closing stock figure in our statement of financial position. I believe you know that. So that's why it is very essential. If you miss it, if you don't get it right at this point, remember, all those other computations that will follow will all be wrong. They will all be wrong. So let us get that point very well. Now, after we have our gross profit, what next? What next after we have our gross profit? I want to take you back to our trial balance. I'm seeing we have 20 minutes left to time. And I just want us to look at any other element of income that we might have before we go to expenses. And we might not be able to finish, but then the most important thing is if you've learned some concept. Now, let us go to our trial balance and see. Do we have any other element before we go to expenses, any other income element that we can bring on board? Remember, when preparing statement of financial statement of income statement or statement of profit or loss, there are always other income elements that normally come in. So let us see, do we have any other element of income? Discount received. I'm seeing discount received here. I believe you know how to treat discount received. If you receive a discount, how do you account for it in your income statement? It falls under other income. Any other thing, any other element of income here? This is return outwards. I'm not seeing any other element. In the additional information, are they giving us anything about other elements of income? I want you to look at additional information. We've already done information 1, 2. Let us look at additional information number 3. There is something that examiner is trying to test there. The allowance for doubtful debts is to be adjusted to 5% of the accounts receivable as at 31st of March 2023. The allowance for doubtful debts. Now, let us come to the trial balance given. Where do we have allowance for doubtful debts? You see it. The allowance for doubtful debts, you are given at what? 450. Now, that allowance for doubtful debts of 450, we are being told that we are going to adjust it to 5% of the accounts receivable. To adjust it to 5% of the accounts receivable. So that will give us a difference in the allowance for doubtful debts. Yes, a difference in the allowance for doubtful debts. Now, how do we account? What are the elements? How do we treat it? How do we treat a decrease in allowance for doubtful debts and an increase in allowance for doubtful debts? Do we know those elements? How do we treat them? Are they expenses or they are incomes? Are they expenses or they are incomes? Both an increase or a decrease? Somebody? Increase in allowance for doubtful debts. So he's saying there that increase is an expense. What of a decrease? A decrease is an income. A decrease is an income. That is very correct. That is very correct. So let us do that computation here. So I'll move my expenses down. And I will bring on board other incomes. And under other incomes, I just want to pinpoint what we've already mentioned. We all agree that discount received is an income. Discount received. So discount received is an income like that. So let us bring on board discount received there. And the discount received figure we were given in the trial balance. Where is it? 325. I will just refer. Then we also bring on board the adjustment for provision for doubtful debts. Let us do the adjustment so that we know, is it an increase or a decrease before I categorize it as an income or as an expense, because I know in an exam, you cannot be sure. Don't just put it here if you've not tested it. You have to test it and know whether it falls under other incomes or it will come under expenses, so that you be sure. Do not just guess. So that's why I'm not bringing it here until we test and be sure. Now, how do we test it? I want us to test it down here. And how to test it? Let us look at the closing provision. The closing provision for doubtful debts. Closing provision for doubtful debts. What is the closing provision for doubtful debts? It was given in the trial balance, and the allowance for doubtful debts is 450. What is the closing for provision for doubtful debts? We are told to adjust it to 5% of the accounts receivable. So the closing is 5% of the accounts receivable. That is what we are going to close the provision for doubtful debts with. 5% of the accounts receivable as at 31st of March. So what is the accounts receivable figure? Let us go and pick it. Accounts receivable, it is 8250. Accounts receivable is 8250. But remember, additional information number 2 was affecting accounts receivable. We were told accounts receivable balance included 250,000 due from a customer who has been declared bankrupt. So we have to also adjust our accounts receivable by what? By 250. We have to adjust our accounts receivable by 250 because that 250 is an amount that is due from a customer who has been declared bankrupt. So it is no longer receivable. We are not going to expect to receive it. The customer has been declared bankrupt. So we are not expecting to receive it. So we have to adjust our accounts receivable balance by the 250. I believe we understand that section. We understand that part very well. Why am I adjusting the accounts receivable by 250? Because the client or the customer has been declared bankrupt. So it is no longer receivable. It has already translated to a bad debt. It has translated to a bad debt. So we have to adjust our accounts receivable by 250. Then we subject it to 5% so that we get the closing balance of provision for doubtful debts, like that. So if I confirm that, I'm getting 400. That is the expected closing provision for doubtful debts. But then, what amount did we open with? We opened opening balance, opening provision for doubtful debts. What opened is what was given in the trial balance. And in the trial balance, they gave us 450. That is the opening balance. What did I click? That is the opening balance. So the opening balance is 450. This one here. What was given in the trial balance. Now, if we adjusted from opening to closing, has it reduced or has it increased?
Say hi to Jenna.
Jerry, please unmute. Please mute, Jerry. Jerry, please mute. Okay. She's not even getting us. Let me mute it. All right. Okay. Good. So now, if the opening is 450 and closing is 400, it is clear that this provision for doubtful debts has reduced. It has reduced by what? By 50. It has decreased by 50. So the decrease in provision for doubtful debts is coming there as 50 because it is the difference between the opening and the closing. It is 50. Now, we've just mentioned, members just said there, that decrease in provision now translates to be an income. If it increased, if the opening balance was less compared to closing, then that means it increased. Then in that case, it is an expense and you categorize it under expenses. But in this case, because it decreased, the provision reduced from 450 to 400, then it is now an income. So we bring it and include it under other income in our statement of profit or loss. So we say there, decrease in provision for doubtful debts, like that. And that brings us to 50. I just want to refer to it like that. So if we include that, is there any element of other income? Let me see, members, I'm seeing some charts here. Decrease, okay, I believe we are together, I believe we are together. So with that, it gives us the total income, It gives us the total income. And the total income up to that point is the net effect of all the three, and it is 24,375. That is the total income there. So I believe we've gotten it up to that point, and I do not wish to proceed past that time. We have 10 minutes to 7, and given our first session and members, we took quite a bit of time in the goal seek concept, but it was worth it because new members, you have to understand what we are doing. So let us pick it up from there tomorrow, and I hope that we will at least try to increase our speed a bit. At the same time, we make sure that everyone is on board, so that, because I told you very